Hi, this is Ümmü Gülsüm Zor, and this is the fourth part of the financial literacy course. In this part, we will talk about what we mean by balance and how we can provide the right balance. We will talk about the basics for budgeting, and we will talk about the ways to manage uncertainty for future. First of all, let's talk about how we define balance. When we talk about the balance at the corporate level, it refers to the relationship between the assets and the resources of a company that have been used to fund to afford these assets. At personal level, it is kind of the same relationship, but the relationship exists between the personal assets and the savings along with any types of liability that a person used to afford those personal assets. So simply, the balance might be in any case. I mean, if you are using savings more to afford your assets, or if you are using liability. So then we are going to discuss about this. So if you look at this, I mean, mathematically, they mean exactly the same thing, actually. The only difference is that we kind of move the figures around the equation. Income minus spending will be savings, or income minus saving will be spending. It depends on the person, so it is going to be up to you how to actually allocate the money that you have. So simply, if we are talking about some income, first you can make your spendings, then the remaining amount would be your saving. On the other hand, depending on the amount of your income, you can decide about the amount of saving. So you can completely forget about it, and then you can decide that, okay, the rest will be my spendings. This is the best one. So this is the right choice that you can make. First, you have the income. It doesn't matter actually how much it is. I mean, as long as you afford your living, you can minimize your spending so you can have some savings. Even though it is only $1 every day, it's going to be $30 per month. So do not assume that, small amounts will not be meaning anything to you in the future. So simply the right choice would be deducting saving from the income and try to live with the remaining amount for your spending. How we are going to know if we are in balance or not? It depends. Some people prefer to have some loan to afford their assets. So, depending on how you're going to be balancing this, also it is going to be depending on how you are generating your income, of course, and then how you're going to be using your income. So if you're saving, for example, the third one on the bottom side, if the saving is greater than income, it doesn't make any sense. Simply, you need to live first, and then you can have some savings. We expect people to have some income, less spending than income, and some savings as well. Depending on the income level, this might change, but we always expect the income get the largest share. Then how we are going to be financially sustained for future and how we are going to be providing this balance simply through budgets. So, we need to learn about the basics of budget first. At the corporate level, budgets might be defined as financial plans, usually taking about 1 year of horizon, and usually it is based on a specified period of time. So 1 year, 1 month, quarterly, so 3 months might be used as well. A financial plan consists of any type of financial activity for any purposes that creates any cash flows in the current period or in the future, depending on your budget periods. So if you're budgeting monthly, then let's say that for next month you have some cash inflows and outflows as well. You will have some income, so there is an inflow. Then you will have some spendings, but there is going to be also some cash outflows as well. Budgets help us to plan and coordinate and also control the future activities. At the first stage, it might not make much sense to you, but as you keep going budgeting every month, for example, at some point you will see where you were off, for example, and what areas that you can improve your financial position. How you can budget is actually a kind of a easy question to answer. There are many technological applications available right now. You can, if you go to Google applications on your phone, on your smartphone, you're going to see that there is many applications that you can only download and just enter your income. Whenever you make a spending, you just enter that amount. So it is giving always you, it always gives you some balance, your balance of accounts, and then you can decide about how you're going to be saving. Or you can use Excel worksheets, or well, if you don't have anything like this, you can simply use a pen and a piece of a paper. So draw kind of a table with your cash inflows and cash outflows. Just keep record of each cash flow. Then simply you can keep record of your spendings and your income. And depending on the level of income, depending on the level of your spending, simply you can decide about your saving. This is the first step. This might be the first step for you if you have never did this before in your life. This is a budget that simply I download from internet. So this is, well, I used Excel worksheet for this. And also there is another course that I am teaching in in this person project, coded as TEL210, basic budgeting on Excel. So if you want to learn more about how we are doing budgeting in Excel, you're more than welcome to take that course as well. In the screen right now, there is a family monthly budget. So there are some expenses on the right. As you see, there are some red amounts, red figures. Simply because there is a projected cost, which is simply the budget, and also the actuals. So if you make a plan at the beginning of the month, and if your plan do not meet the actual results, which is usually the case, because we cannot 100% surely predict the future. So then there is going to be a difference that we call this difference as variance. If there is an unfavorable variance, well, simply it is going to be decreasing our income. We just put it in the red figures so we can keep record of them in the future. And then on the right side, you see that projected monthly income. And at the bottom side of it, you're going to see the actual monthly income. Even though this budget is perfectly fine with the, in terms of the income, simply the projected expenses did not come true. So there is some negative variance because simply the difference is negative. And therefore, it means that we need to make sure that if there was any problem in here, if why we didn't precisely predict these expenses. So we need to work on it. As you see in the budget, we have a projection and we have the actual results. That's why we are actually keeping record of our spendings and also income. So simply we make some plans, so we budget, and therefore after the actual results come in, we simply compare the actuals against to the budget, so we can know why we were off at some points. This is the control function of budget, not just planning, also coordinating and controlling of our financial positions over time. Once you keep budgeting every month. By the way, don't forget that if you're using monthly budget, you always need to be consistent with the period that you're using. Otherwise, you cannot compare, let's say, February to January. So if you keep doing budgeting every month, simply at some point you're going to have some data for your previous financial activities. So you can compare months to, well, let's say the last month to, well, last year, last month. And then you can see what changed. You can see what areas that you need to improve. And let's talk about some future uncertainty. So future is full of risk and uncertainties. No matter how precisely that we are predicting future, there is a great chance that our projection is not going to get come true because it is uncertain and it is not only up to us. Remember, please, the first part we talked about the economic environment. So simply basics of economics is not only up to us, it is also up to the environment that we have been surrounded by. Therefore, that's why actually we have uncertainty for future. So no matter there is an uncertainty or not, we can still manage it. So we can take some necessary actions from today, even though the risk did not come true. There are different alternatives for each course of actions, of course. It's like just the parallel universes. So each actions that you will have will be leading to some ends. It is important to plan for the moderate scenarios as well as the worst case scenarios as well. If we talk about risk and uncertainty, simply we need to consider insurance. Health insurance comes first to think about. So even though you're at your young ages, you believe that you're never going to get ill, you're never going to need some urgent operations at the hospital. I hope you never have these needs. But however, there is a risk for all of us. So we need to manage these risks from today. So we can have the insurance, even though insurance sounds kind of costly to most of the people, especially to young generation, it is going to help us to keep our financial position sustained over time. Because if you have, let's say, no, and you don't have any insurance, and then you get sick, you need some urgent operation at the hospital, which is going to cost about $3,000. How are you going to afford it? Even though you have some cash, well, excess cash in your saving accounts, you need to spend that amount. However, if you have the insurance, you will be kind of splitting the risk into a longer period of time, so you're not going to be affected by that amount anymore. Well, even though the most tight budget should have some room for insurance, it comes before savings or before investment. And also, past experience is always a good mentor for the future. So you need to look at the previous financial variances. Then we go back to the budgets that we have from previous periods. There is no bad timing to start budgeting. So even from today, you can start over and then you can keep record of your financial, your cash inflows and outflows. So over a period of time, you will have some periodic data that you can analyze and see where you can improve your financial position. And in the next section, in the next part, we will talk about saving, investment, and planning for retirement. Thanks for participating.